Hello and good afternoon, ladies and gentlemen. Would like to start off by thanking you for setting aside time to join us today on the NMB half-year investor call hosted by iTrust Finance. Before we start off the call, I would like to remind you that you can ask the questions in the chat or the Q&A, and we will address them after the presentation. So please feel free to ask as many questions as you can. This is your opportunity to interact directly with NMB's management team. That being said, thank you again for taking the time to join us on this call. That being said, I would like to hand over to our CEO, Mr. Faiz Arab, to kickstart this investor call.
Thank you, Frida. Good afternoon, listeners and investors. Welcome to our NMB's half-year investor call. With us on the call, we have Mr. Juma Kimori, who is the Executive Director of Finance and CFO. And I see Innocent there as well, Director of Investor Relations. Welcome, guys. I think I will hand it over to NMB team to maybe give us a quick intro and start off with this investor call without further ado.
Okay, good afternoon, iTrust team and investor on the call. Okay, I'm Juma Kimori, the CFO for NMB Bank. With me, I have a team here from Investor Relations. We have Innocent Yonazi and Mark Hiza, who is the head of Investor Relations. Now, thank you all for joining the call. And the way we will run it, just as we normally do, and we will pretty much cover the macros and then get into the H1 financial performance. And then we'll cover in terms of how we trend as far as market cap and share prices are concerned, but also most importantly, just to remind our investors in terms of the share split, the progress we have made. So at this point in time, let me welcome Innocent to walk us through the macros, and then I'll take you through the strategy and financial performance at large. Then we'll allow for questions, comments from our investors and other people who have joined online. Thank you, Innocent.
Thank you, CFO. Next slide. As Juma has already said, I'll take you through the global macro environment as well as the Tanzania operating landscape, just to shed light in terms of the bedrock upon which our business operates and your investment decisions are made. So in a nutshell, the global economy continues to be resilient. It has stood up better than what was earlier projected, despite the ongoing macroeconomic headwinds, which have been largely exacerbated by the ongoing geopolitical tensions, especially in Middle East. We have seen that the global economy has remained resilient with GDP levels at around 3.0% forecasted for the year 2026. And this GDP growth has been largely contributed by the faster than anticipated investments, especially in the technological space, more so the AI investments. But if we look at the global inflation, we see while the globe had experienced a period of relative disinflation, we have seen that inflation has spiked in the first half of 2026, reaching the levels of 4.7% compared to the levels of 4.1% which were recorded in the previous year. And the largest contributor for this global inflation phenomenon has been the rising Brent prices, whereby while in half one, we saw there was relative volatility, reaching at all-time highs of 107 in the month of May, post the conflict in Iran as well as US. We saw that the prices a little bit normalized, reaching the levels of $82 per barrel in the month of July, post the signing of the 15-point ceasefire agreement between the parties. However, the global uncertainty continues to weigh on the global inflation, and now, as we're speaking, the barrel is trading at around $89 per barrel, hence putting pressure on the inflation of the globe, as I said earlier. Next slide, please. While the global has been weighed so much in terms of the inflationary pressures, but also challenges in terms of the GDP projections, we see that Tanzania has remained relatively a stable and exciting macroeconomic environment, whereby we see our GDP for the Q1 of 2026 is estimated to be around 6%. And what is more encouraging is that those levels are projected to be sustained as we exit half one of 2026 with a forecast of around 5.9%, showing that our GDP growth is outpacing the global GDP, which is estimated to be at around 3%. And if we compare our inflation compared to the global inflation, while we have noted that global inflation is around 4.7%, Tanzania we're very well contained the inflationary pressure, despite the fact that we have had challenges in terms of imported inflation, as I said earlier, due to the ongoing geopolitical tension. We see that our inflation, they have remained relatively below the 5% levels, which have been set by the Central Bank of Tanzania. But what is more encouraging is that the levels of inflation upon which we're operating under, they are even relatively lower compared to the East Africa as well as SADC convergence thresholds of 5%. But also, we have noted that over this period of half one, the economy has continued to be resilient and exciting insofar as exports and imports are concerned. If we look at the exports and imports on the right-hand side of the presentation, you see that our exports have grown at around the levels of 17%, which is relatively resounding, and our imports have grown at the levels of 18%. Our exports have now reached more than 20 billion, which are all-time high, hence positioning Tanzania to continue and to sustain the exciting macroeconomic scenario that we see, and we as a business will continue to benefit from the exciting macroeconomic environment. Ladies and gentlemen, if we look at the forecast, the country has set forth an exciting Tanzania Development Vision 2050, and we are now upon the 5 years of the execution phase, which is FYDP version 4, but it's the first time that we're executing under the Tanzania Development Vision 2050. And we'll see that there are exciting and there are important projections that we have set. As a country, we are anticipated to reach the levels of around 118 nominal GDP by year 2031. But more importantly is the level of new job creation targeted to be around 8.5 million, hence positioning Tanzania as well as NMB to be on course for even sustained and future growth prospects. Next. What we see here in this slide is the whole financing demand. The vision is anticipated up to 2031 to have a demand of financing projected to be at around 478 trillion, which gives us encouragement that 70% of those projections are targeted to be coming from the private sector capital. And we, as one among the leading bank here in Tanzania and a bank of systemic importance, we believe that this vision that has been set by the government of Tanzania positions us very well and to be on course for our sustained future and growth prospects as we have set forth in our medium-term plan 2026-2030. So we continue to be in the lookout in terms of opportunities that are set in the development vision, and these have been very well translated in our medium-term plan, and we believe that once we continue to execute, the bank will grow not only from strength, but from strength to strength. Thank you so much. Allow me now to welcome the CFO to present the banking sector overview.
Yeah, so thank you very much, Innocent. And just to walk you through what we have seen from the sector so far as H1 is concerned. And you will notice that the sector has delivered very solid growth in terms of the balance sheet with 28% year-on-year growth. But we have also seen modest growth as far as income growth is concerned. And in a way, we have also seen decline in FX income, quite a number of banks across the sector, by around 22% year on year. But again, if you look at it, we have experienced the rising cost of funding, and that has resulted in a sort of squeeze or rather stretched net interest margins from around 9 to 6% for the first half of the year. But again, of course, we have seen due to the high cost of funding. We have also seen quite a number of increase, or rather the growth in the borrowings, where the borrowing has also increased by around 26%. So overall, when we look at the sector, banking sector has recorded very solid growth as far as balance sheet is concerned, moderate growth on the profitability. And of course, I will cover in detail in terms of how NMB has performed against the market. But I think the slide also illustrates that as a bank, we continue to have 32% market share on profitability, 22% on deposit, loans and advances, and assets overall. We continue to, I think this has been maintained year on year, and that's, to me, is a very positive message. We have been able to maintain our market share across the balance sheet lines. Now, moving on to the next is just to share with you in terms of refresh in terms of our medium-term plan, the Agenda 2030. If you recall, last year was our last year of implementation of our MTP, which ended in 2025. And therefore, early this year, we communicated to our stakeholders what we plan to do, or rather, what are the strategic initiatives and where we want to position this bank in the next 5 years. Now, 2026 is the first year of implementation of our 2030 agenda. And the strategy is pretty much cycled around the 4 strategic pillars. One of them, Power Retail 20 by 30. And here we're saying that by 2030, we target to onboard around, to have total number of customers around 20 million. And then I will unpack in terms of what is it that we are doing going forward to ensure that we onboard, we get to that level of customers. But again, the appreciation that SME is the engine for the economic growth. We have a pillar relating to evolve SME ecosystem, and we have various initiatives to drive our penetration and support that we need to provide to the SME subsector. But again, we continue to deepen our penetration in the wholesale space and improve or rather increase our market share in that space. I think we have also deliberately, decided that we are going to expand beyond today's core business. And I think this is pretty much linked to both organic and inorganic growth that we aspire. And this is definitely just to preempt in terms of the question that we normally get from our investors. What is the plan in terms of the cross-border? So this pillar is pretty much focusing on inorganic growth. And as we speak, you recall that we actually informed our investors sometimes back that we have started the journey. We have all the necessary board approvals, and we are currently looking for the right targets. We have some that we are already discussing with in country, and some we are discussing with across the region. And I think when the right time comes, we'll announce to our stakeholders, including the investors, in terms of the decision that we are making as far as inorganic growth is concerned. And if you look at our strategy 2030, pretty much cycled around customer centricity, and that will be enabled by having a future-proof organization in terms of the resources that we intend to deploy, in terms of the investment we plan to make in technology. But most importantly, all these will be geared towards driving customer experience and excellency without forgetting our key focus in the ESG agenda going forward. So that is in a nutshell what our 2030 agenda is all about. And then I will unpack a bit. I talked about Power Retail 2030. That means reaching 20 million customer accounts by 2030. Now, in terms of how we are going to do that, I think this slide illustrates in terms of our real intention to increase access. And this is just to ensure that we expand our touch points across the country. And as we speak, we have different ways. So one of them is agency banking. And as we speak, we have around more than 80,000 agents across the country, more than 250 branches across the country. We have more than 700 ATMs across the country, but we also see the growth that we are recording on merchant, penetration in the merchant, LIPA number, NMB LIPA number, QR codes. And of course, we are looking into our proposition as far as rural banking is concerned. And we have so far reached quite interior parts of the country, through Mnadani outlets that we have completed. So far, we have 5 across the country, and we see that there's huge opportunity as far as driving, delivering financial solutions and bringing more people into the form of financial services. But again, you recall this early this year, we launched our 8 new bank on wheels, and we see very much good traction in terms of what the value these banks on wheels create, because it's like a fully fledged branch where people are able to get in the branch, can withdraw, they can deposit, they can apply for loans and so on. So it's like a mini branch moving across the up countries. I think the other thing that we are also doing is, as far as the country agenda is concerned, financial inclusion remains to be our key focus going forward. And, we have micro lending, Kikundi, which is group accounts. We have NMB Pesa, which doesn't require any person to have a balance, minimum balance. But again, we have so far reached around 2,000 villages. And, we have onboarded people on our spend to save, which is a proposition which drives the savings behavior. And we see quite a good traction as far as that proposition is concerned. So we'll continue with our agenda to drive financial inclusion in line with the country's objective. Again, if you look at that, the progress based on all this that we are doing, around 94% of transactions are currently happening digitally. And you have all probably witnessed the mega launch that we did on NMB Mkononi app, which is now a super app. And we have so far onboarded around 4 million users. And we continue to onboard more. And of course, because we have quite a number of solutions within the mini apps, we'll continue to also onboard sub apps so that we are able to optimum on this very substantial investment that we have made, but also most importantly, to make it so relevant to our customer and to address the current and trending customers' needs. We move to next. Now, I talked about SME ecosystem. So we are currently working in the agri SME loan portfolio has grown, and we are talking about around 2 trillion, 65 year-on-year growth. That's a very solid growth. And we believe that in the agri, but also trading, SMEs are huge. There's huge potential in there, and we have the right solution to just address their emerging needs. And we'll continue to work with the SMEs and different partners to ensure that we tap into more opportunity that we see. And so currently we're working with IFC, BII, Nordfund, and other partners just to ensure that we expand our reach into these very substantial sectors for the economy. And we will ensure, if you look at it for now, QR payments, we are also working on some ERP for the SMEs, but also SME World Credit Card has been launched. LIPA number continues to support the businesses, but most importantly, Mshiko Faster is no longer just for personal banking. It is also for the business banking segment. I covered in terms of another pillar, which is pretty much to drive rather penetration into the wholesale space. And this slide just demonstrates the progress that we have made. If you look at our loans and advances, 34% year-on-year as far as wholesale banking is concerned, but also off-balance sheet has also grown marginally. But this is just because of towards some repayments or other settlement of LCs towards end of June. But if you look at the quality, whilst we are growing at 34%, but still NPL in this segment still very healthy at 2.3%, which is an improvement from 2.7%, but also very stable funding at LDR of 71%. So it's an area that we will continue to grow, and I will illustrate later in terms of, if you look at it from our diversification perspective, I think the wholesale banking is now making around 28% of our loans and advances across the bank. On the employee side, we continue to invest in our people, and you will notice that if you look at it from 2024, where staff cost was just 55% of the total cost, currently we are sitting with around 57% of the total cost, and we invest substantially in the learning, around 7.7 billion there. But also, if you look at staff turnover, is very much below the industry. That means that we continue to attract and retain quite a number of good talents, but also in terms of contribution of the bank to the staff welfare, around 10.3 billion that has been spent there, covering health, some wellness and support, other supports that staff need. I think that has resulted into validation by external parties, Top Employer Tanzania 2025, 2024, and 2026. But most importantly, we continue to maintain EDGE certification. I think in Africa, NMB is the first financial institution to get into that level. And we have quite a number of programs, including Future Leaders Program, other programs that look into onboarding students from the university, management trainees, and so on. All this is just to ensure that we have the right people, right skills, and capacity to drive the growth aspiration that we put as a bank going forward in the next 5 years and beyond. Now, let me cover a bit in terms of what we are doing on the technology space. And this is just also as an enabler, but just to ensure that we accelerate the investment in technology. You are witness in terms of what we have just done. And I think I'll cover just a few there as far as investment in technology is concerned. We have invested substantially on the core banking system, and we went live on the 3rd of August. Just to highlight that the go live was very successful, and we are currently dealing with the post-go live activities as usual in terms of supporting customers, supporting our stakeholders who are facing a little bit of challenges here and there. But overall, if you look at it, the go live went very well, in line with what we expected. Some few challenges here and there, of which the teams continue to support our customers across. We have also recently completed the launch, or rather the implementation of Mkononi Super App, as I said earlier, which is expected to drive more access, but most importantly, various propositions within the Super App to enable our customers to enjoy all the necessary financial solutions and services, which will cut across the SMEs and so on. So it's an app that will onboard quite a number of service providers going forward. And I think the intention is to see that if someone wakes up in the morning, if you go to NMB Super App, you get all the necessary services across different sectors, and you will enjoy the journey with us going forward. Internet banking as well. This also went live on 3rd of August. Quite substantial enhancement there. It went live with a new core banking system in August, and we'll see good traction in terms of the usage by customers, but most importantly, our teams through relationship managers continue to support our customers to make smooth landing as far as the internet banking is concerned. It's a substantial or rather significant investment we have made, and we expect that this will provide or rather give value to our customers and make their lives easy, transaction easy, but more convenient and user-friendly user interface and so on. I think this is something, a big change for us and for our customers, and we continue to work with our customers to ensure that adoption increases, but they get necessary support as far as these financial solutions and technology are concerned. Robotic implementation, this is an ongoing, and we'll continue to invest as much as we can in robotics processes, both internally but also in terms of addressing our customers' needs. So things like chatbot and so on, these are all work in or rather, continuous improvements that we continue to make in our processes, both as internal processes, but also in terms of addressing customers, delivering customer services. And this will all create efficiency going forward, but make this organization lean and able to solve, or rather to deliver necessary and appropriate, convenient services to our customers going forward. Next. Now, allow me to cover a bit in terms of the financial performance. I hope we have all read this as they were published towards the end of July. But I just highlight in terms of the key drivers for the performance for the first half of the year. Now, when you look at the balance sheet, our loans and advances grew by around 26%. This is pretty much lower than what we recorded as far as deposits growth is concerned, 29%, meaning that positive funding jaws. Our loans, our customer deposits are growing faster than the loans and advances. But you will also notice that quarter on quarter, we have been able to record quite good growth. Quarter on quarter, where loans and advances have grown by 9%. If you look at Q1 versus Q2 2026, but most importantly, again, if you look at from January up to date, we have recorded up around 12% growth there as far as loans and advances is concerned. Moderate growth quarter on quarter as far as deposit growth is concerned, around 4%, and from January around 5%. But I think this growth, you will also notice that from the ratios perspective, NMB remains to be very healthy, ratios as far as balance sheet is concerned. Our capital remains at 23% against regulatory requirement of around 14.5%. And also all the regulatory requirements as far as liquidity ratios are concerned have been met. Liquidity coverage ratio around 740% against 100 requirement by the regulation. Again, net stable funding around 150% against the regulatory requirement of 100. So in a nutshell, from the balance sheet performance perspective, very solid growth. Total asset 26%. This is pretty much aligned with what we have seen as far as industry growth is concerned. Now, just to unpack in terms of the composition of the loans and advances there, you will notice that I have already said it. Our loans and advances, cumulative average growth over the last 4 years is around 20%. And you will notice that from as far as our diversification agenda is concerned, the wholesale banking growth has been improving. But again, you see the composition of wholesale versus retail from 19% in 2023 to now we are talking about 28% composition of wholesale to the total loan book portfolio. But again, I think the other thing is that you will realize that the personal banking, we have in the last years, we are predominantly, I think personal banking was making around 54% of our loan portfolio. That has reduced to around 51%. So in a way, we continue to see that our balance sheet continues to be diversified as far as loans and advances are concerned. But again, if you look at it from the funding perspective, CASA continues to contribute 85% of our customer deposits. And that shows the stability as far as our funding base is concerned. And over the last 4 years, we have recorded a cumulative average growth of around 16% as far as customer deposits are concerned. Continued to deliver healthy portfolio with NPL of 2.5%. Now, in terms of the quality of portfolio, I've talked about the NPL, which is pretty much in line with what the industry has reported, 2.5% for the first half of the year. But also we have maintained the cost of risk at 0.9%. If you look at it, I think H1 2025 was the same level as this time around, but the NPL has also relatively reduced if you look at it year on year, but it is still well within the regulatory benchmark of 5%, but also in line with what the industry is reporting. So quite robust growth in loans and advances while maintaining the quality at acceptable levels as far as NPL is concerned, but even portfolio at risk there, we have improved from 9.6 to 7.3 in H1 2026. Allow me now to just quickly run through the profit and loss. And again, is a solid performance if you look at it, where our operating income is growing at 15%. Cost growing around 16%. That gives us a negative cost to income jaws, but this is pretty much an improvement if you look at Q1. Just to remind you, when we reported our Q1 results, our operating income was, our profitability was just at around 5% year on year. Now profit before tax is around 13%. Our non-interest income by Q1, the growth was just 2%. Now we have recorded 12% year-on-year growth. This is a very solid growth, and we continue to see more traction as far as non-funded income is concerned, and we hope that towards year end, we will record more than these levels as far as growth is concerned. So we have been able to deliver profit before tax of around 580, which is 13%, as I said. But importantly to note is that, and of course, this was just 5%. This is pretty much in line with what we have seen. Sector has grown by around 14-15%, and we are trending at 13% year on year. NMB continues to record a robust return on equity of around 26%. I know industry is trending at around 21%, so pretty much ahead of the industry. But again, if you look at our efficiency level, NMB continues to demonstrate efficiency as far as cost to income ratio at around 38%, but also return on asset at around 4.7%. Solid and pretty much in line with what the industry has delivered. I think just to highlight in this particular slide is just to appreciate in terms of if you look at quarter comparing Q2 and Q2 2025 and Q2 2026, you will notice that we have recorded. So, for example, on the operating income, if you look at our performance as far as these specific quarters are concerned, you will notice that we have grown by 21%. In that particular quarter, 2025, what we are able to deliver against what we have been able to deliver in the same quarter, 2026, that is 21% year-on-year growth. But again, if you look at it from the profitability perspective, 304 against 249, that is 22% if you compare the two quarters, 2025, 2026. But again, if you look at it quarter-on-quarter growth, if you look at Q1 2026 versus Q2 2026, you will also notice that from the growth perspective, the bank continues to record solid growth quarter-on-quarter. But most importantly, if you look at the same quarter last year versus the same quarter this year, robust growth above 20%. So this is a clear indication that the execution of our strategy continues to deliver the best outcome as far as numbers are concerned. We are pretty much on track as far as our strategic initiatives that we have put in place for 2026, but most importantly, towards 2030. And the disciplined execution of the same continues to deliver solid performance, solid growth as far as profitability is concerned. Now, in terms of just to unpack, I talked about what we see in the market as far as NIMs are concerned. Net interest income, there you will see that, of course, we have maintained at 9.1%, but with our risk-adjusted dropping, or rather also maintained at 8.3%. We have seen this as far as industry is concerned. The NIMs have reduced from 9% to around 6%. This is in the back of the pressure that we see as far as cost of funding in the industry is concerned. We have seen quite a number of players coming with alternative investment programs, attracting around 13% thereabout. That continues to put pressure as far as cost of funding is concerned. But I think if you look at it from our cost of funding, there's no much spike as far as cost of funding is concerned. We have maintained almost same levels. If you look at it from Q4 2025, 3.2, and Q1 3.3, and we have landed Q2 H1 by around 3.08. So we continue to accelerate the growth, and our focus is really to drive cheap and sticky deposits so that we cushion our NIMs going forward. Now, in terms of non-funded income, again, very solid performance. If you look at it overall, we have delivered 12%. Just to unpack that, the key driver there is fees and commissions, which has grown year on year by around 23%. And I talked about FX income. If you look at it, there is a dip there of around 9%. Now, if you look at the industry performance, the FX income has dropped by around 22%. This is in the back of US dollar liquidity in the market. We are all witness. I think the liquidity has been stable as far as US dollar is concerned, and that has resulted to what we see. And therefore, I think in the previous years, quite players in the market made substantial amount on the alternative currencies, which is not the option now. So I think most of the businesses have continuously and consistently used the US dollar, of which liquidity has also been stable in the market. So we have seen this is not only for NMB, but even for other players in the market. Now, that has resulted into the NFI contributing around 34%, clearly indicating that we continue to diversify our income streams. The next slides are mostly on the share performance. As investors, I know you have this even more than I have, but just to highlight is that we have seen solid growth both in terms of the volume traded, but also accelerated or rather exponential growth in our shares. Share prices. If you look at it, just in January, the shares were trading at around 8,500. And currently trading around 17,600. I think today it was around 17,700 thereabout. So this is a solid growth, more than double in 6 months. This is welcoming news to our investors. And I think this is commendable to see this position, and that actually positions NMB as the most valuable listed bank in Tanzania and the second most valued listed entity in East Africa. If you look at it from the financial, from the banking perspective, I think we are now leading We are now leading across East Africa as far as financial institutions are concerned. And that's a good news. We are proud of that, and we continue to thank you all investors for trusting NMB and continue to invest in our stock. And that continues to demonstrate the confidence that you have on this in us. And as such, just allow me to cover just a refresher. I think we came out with an announcement as far as share split is concerned. I know today you won't have any question relating to share split. I hope so, because this has been one of the recurring questions from our investors in all the calls that we have had. Now, this year, we have made a decision to split, and I hope you are all aware of it. Just to let you know that tomorrow is 19th, and that is going to be the last CAM split trading date. And therefore, by the close of the market, trading will be suspended. And then record date is on 21st of August. And we will open the trading on 24th of August with a new number of shares that our stakeholders, or other shareholders, will be holding at that point in time. And we thank you very much for your continued support, and you have made the right decision to invest in this bank. And I think we have sought all the necessary approvals so far, and the process has been smooth. And we hope that we will end this process smoothly as planned. And with that, I thank you very much. And now I think it is time for any comments, any questions that our investors and other listeners may have online, and we are happy to take them on board and respond accordingly. Thank you very much.
Thank you very much, Team NMB, for that extensive presentation. Just because you have mentioned it, that there are no questions with regards to the share split, I need to address the questions. First of all, congratulations. Most of these calls, as you've mentioned, everyone has been asking about when the share split will happen. So iTrust is honored to actually host you guys on this significant week. So just to go back to the 1-to-10 share split, we know about the dates, but can you break it down what this means for the actual investor? So we have a few questions with regards to that, and I think that will allow us, or rather allow the investors to get a clear understanding of how this week will look like for them. So the first question is, the CMSA approved the 1-to-10 share split, yet the DSE market display still shows the old higher price. Could you clarify whether the new split adjusted price has already been implemented in the market? The second one is, could you clarify whether shareholder registration for the 1-to-10 share split is handled automatically via the DSE CSDR system, or if investors must re-register through their brokers or directly with NMB Bank to ensure their holdings are correctly updated? And then the third one, for individuals who are new investors and wish to buy NMB shares after the 1-to-10 split, what is the correct procedure? Should they go through licensed brokers on the DSE, or can they register directly with NMB Bank to access the new split adjusted shares? So I think those are just a few questions, but they give us an idea of how our investors are still not understanding exactly how this. So if you can just break,
Okay, so
before, during, and after. Yes, Khalid.
yeah, so those are pertinent questions, and allow me to welcome Innocent to walk us through in terms of the process, who will be responsible for what will the investors be expected to do. So Innocent, if you can.
Thank you. Thank you. And we really appreciate for the question, and I hope we'll shed some more light. Before this call, we had sent a public notification just to provide a detailed update in terms of the roadmap of our execution process. But once again, just to re-emphasize, The dates that are shown there, they provide a brief overview in terms of the process. So if you look at the 19th of August, that will be the last CAM split trading date. After that date, we're going to suspend trading. So the NMB shares will not be traded at the Dar es Salaam Stock Exchange. But what is more important is the record date will be the 21st of August, meaning that we'll take stock of all the shareholders that are within the register, and those ones will be recorded as the owners of the NMB stocks in our register. But the effective date, when you talk about the adjusted price for the stock post the split, will be the 24th of August. So this is when our share price will be reflective of the split decision that we'll make. The 1 to 10 split decision, this is when the share price will reflect that decision, meaning that if by the suspension date, for example, NMB is trading at around, let me give you a figure, let's say 100 shillings per share. If you divide it by 10, that will be the effective adjusted price when you reopen the market on the 24th of August. So the adjusted price will be effective on the effective date. So the price that you are seeing right now, just to answer the second question, is that it is not reflective of the split corporate action. So currently we are still trading, around the levels which we were trading before the split decision. So I hope that provides an overview in terms of the roadmap. The second question talked about the registry update. So there has been close engagement between NMB Bank PLC, CMSA, as well as DSE before the execution roadmap was established. So all the teams, especially the teams in CSDR and DSE, they are very much on board in terms of handling the registry of the bank. And as we speak, that integration will correctly be done, and you don't need to come to register with us again, but it will be reflective in our registers come the effective date of 24th. The third question talked about what happens after the 1 to 10 split. Do you need to come to the bank to buy the shares, or do you need to go where to buy the shares? The practice of shareholding and purchasing of shares will continue to be akin to what it is right now. So what you will need to do is to go to licensed brokers to buy the NMB shares. And that I hope that clarifies. So the practice of how you get into owning NMB shares will continue as it is. Nothing is going to change. It's just that the ownership and the share split, that is when will be executed by 1 to 10. But the practice will remain largely unchanged. I hope this clarifies.
Thank you very much, Innocent, for breaking that down. I think that has allowed the investors to kind of gain a better understanding of how the share like. And as you've mentioned, they can purchase these shares at licensed brokers. So iTrust is available in case you need a better understanding of how this share split will look like, or if you'd like to buy more shares of NMB. And as per usual of these calls, we're finished with the share split, and now we're moving to the interim dividends. So we see banks in Kenya issuing interim dividends, which give shareholders value during the year, rather than waiting for the final dividend. Can NMB board look into this as well and be the first bank in Tanzania to issue interim dividends? And then just to stick to the dividend as well, will the share split affect your dividend policy? Example, should we expect lower dividend per share? How will that look like?
Thank you. I will start, and the CFO will play with the managerial prerogative in the outlook. So just to provide a quick overview, we are very humbled and proud to be the leader in terms of creating the market first. We are sitting here in front of you, our shareholders, as the first bank in Tanzania to move with the corporate action of a share split post the creation of the Dar es Salaam Stock Exchange. But referring specifically to the dividend, what have we done to create the market first? From the banking sector point of view, you saw this year, you have enjoyed a special dividend that we provided. Our dividend policy remains largely what you approved in the annual general meeting in the month of June. So our dividend policy provides for dividend that we normally pay on an annual basis, but we have looked innovatively on the special dividend. And I will not close the door, or I'll not open the door to say that the bank can look on interim dividend. That can be something that if the shareholders request, that is something that can be looked collectively by the board of directors, but more importantly by the shareholders in their unison. We are guided by the policy, but those are things that they can be looked at. That is on the dividend. Maybe the CFO would like to
Okay,
add.
thanks, Innocent. I think the question whether the split will result into lower dividend. I think dividend is a function of profitability, and given our projections, our trajectory, the execution of our strategy, if you look at H1, the growth that we have recorded, and we continue to see positive trajectory, we'll record growth year on year, and as such, dividend in terms of the growth will also grow in line with the profitability growth. I think what will only change there probably is the dividend per share, just because the number of shares has moved from 500 million to 5 billion. So the denominator has substantially increased. But what will go into our stakeholder shareholders' pocket, if the profitability increase, that will also increase accordingly. So just because of the denominator change, you would expect probably the dividend per share may be going down, but overall, in terms of the value of the dividend, will continue to grow as far as our profitability is also growing.
Thank you very much for that. Oh, sorry.
Yeah, so just to give you a resounding answer, the value of the dividend will not change. Actually, will exponentially increase as the bank continues with its growth journey. Thank you.
Thank you very much. You have mentioned that you are customer centric, and one of the questions that we have is for people in the diaspora, and I think they're looking into how NMB can accommodate their ability to become clients or customers of NMB. So if we can get an understanding of what NMB is doing to accommodate people in the diaspora and to make their transactions easier. As we're looking into that with regards to the diaspora, we also have another question. What is NMB's strategy for using digital solutions to attract and convert the younger generation into long-term customers? So diaspora as well as the younger generation. What do you guys have in store for us?
Okay, so thank you very much for the questions, and I just I'll try to respond to the two, and my colleagues will add into that. So thank you for the diaspora question, and I think just to refresh our memories, I think it was last year, if not early this year, where NMB launched our diaspora proposition named NMB Kwetu proposition, and we have that proposition that is trying to address some of the needs of our diasporas across the globe. And we have a specific unit, so to say, sub-department that deals with diaspora. And we welcome our diaspora, and probably after this we'll request for any contact that specifies for someone who has asked the question, so that we can have a chat in terms of our NMB. But we have propositions that enables diasporas to open accounts remotely, other financial solutions like mortgage. We have remittances, through various channels. If one wants to send money home for savings account as well. We have other things like Wekeza proposition, which is also an investment for the diasporas as well. They are all welcome to invest in these opportunities, spend to save. So we welcome the diasporas. We already have a proposition. We have a team that moves around across different countries, and we are happy to get in touch with any customer who is in need. So we are happy to get contact. I trust if you can help maybe later for us to engage that customer directly. But we welcome all diasporas to invest in NMB. We have quite a number of solutions and products for you, and we will continue to drive to invest in our diaspora proposition. We welcome all the feedback from diaspora, and we'll continue to support. Youth proposition, again, is an area where we are playing, so we have NMB Go. Go na NMB. This is a proposition tailored for the youth. And we have quite a number of engagement with the youth. And to be honest, is a proposition that we are currently also refreshing. We have different engagements that we have had with the youth at universities, at schools, and so on. And is a proposition that we are currently revamping, and probably soon you will see some changes. But there is a proposition that is already existing as far as youths are concerned, and maybe just we need to accelerate in terms of communication and awareness to the youths, but we already have that proposition. Maybe just need a bit of tweak here and there based on the feedback that we have received so far. So we are keen, and as I said earlier, SME, MSC being the focus area, that's where also youth will also play. So we start with the youth from the university, from the schools, all the way, and we expect that these are the future customers of the bank and our ambassador in the respective universities, but also in the future, these are the great ambassador of the bank. So we are inclusive as such, and will continue to probably drive more traction as far as youth proposition is concerned.
Thank you very much. I believe, just to stay in touch with the youth, there is an NMB management trainee program, I believe. And we have a question with regards to that. What qualities or mindsets do you see distinguishing young professionals who go on to become high impact contributors within the bank? So I believe this is with regards to the NMB management trainee program that you have.
Yes. So NMB management training is a program that we are running now. I think it is for the can't recall exactly when it was started, but is a program that has benefited this bank significantly, and not only this bank. We take these graduates from university. It's a very competitive program, and this is for the youths or other students or other graduates who are able to demonstrate capabilities, who are thinking beyond just academic, who are able to, because we have them, if you look at it, there are those who are now sitting in the businesses. There are those who are now sitting at the, in the support functions. And I think the program has been so, beneficial to the bank, because we have been able to deploy these people into areas where they have been able to make differences. So it's a program that we'll continue to invest in, and we normally attract both, students domestically, but also those who are studying abroad. And, every year we announce in terms of the entry criteria, and people go through a very robust process in terms of onboarding process. And then once they are here, we expose them and stretch them big time to areas where they want to grow. But most importantly, we rotate them across the organization so that one has a 360 degree of the organization before making a decision on where the career aspiration and ambitions are. So from where I'm sitting, from where the bank sits, I think it is a very good program, and we have seen the value in it. We have seen those who have been as part of this program excelling, not only within NMB. Some of them, when they move here, they take higher positions to other organizations. So we are proud that is a program that continues to make NMB as a training ground, very solid. And when people go out there, they really perform, and we see the benefit out of it. So that's what I can say, and we'll continue with it, as I said. So welcome those who want to join to go through the process, which is robust. We have one of them here sitting with me across here in the room. So it's really a solid program, to be honest, and we are proud of it. We'll continue to run it. We have seen the impact, very positive, and is upskilling, capacity building, and so on and so on. Thank you.
Yeah, thank you. I mean, maybe to add on what CFO has already said. If me and CFO speak about graduate management trainee, probably we might lack the legitimacy because we are all-time bankers. We have one graduate here who is seated here with us, and I believe he will provide you first-hand experience in terms of how this program is enriching professionally, personally, and from a career perspective. So, Sam, please come and sit.
Excellent experience.
Thank you very much, CFO. Thank you very much, Director Innocent. It's been a pleasure to have this investor call with you all, with all of you investors, but also share my experience. Regarding the question on the depth and the breadth that management training program offers, it is immense, and it is truly commendable to every youth that is looking to upstart their career and to get a launch pad for them to have a good trajectory for their career. In terms of the skills that probably the one who has raised the question, I believe it comes from a very diverse set of skills. This includes communication, your ability to communicate with your team, with your colleagues, your ability to communicate to the community, but also it comes hand in hand with your versatility. The CFO has mentioned that you rotate across different departments, so doesn't matter what background you're from, be it engineering, be it mathematics, be it social sciences and the business field, but you rotate through the same course of rotations, being business, being it support functions, the IT functions, and the innovation side, for you to get a whole depth and understanding of how the banking industry operates. But all in all, conclusively, there's also teamwork, your ability to communicate, to work in a team, and to work together into formulating ideas is also a part of the skills that they evaluate, because you're going to work with people from different areas. NMB with this depth has more than 5,000 employees. So you have to know how to communicate with your team, but also to your senior team and executive people. So all in all, I would say that the experience has been nothing short of amazing, and an immense opportunity. As you see today, I'm able to sit across the CFO of the organization, but also the Director of Investor Relations. It shows, and it's a testament of what the program offers, because you wouldn't get this kind of exposure in any kind of organization elsewhere apart from NMB, but also specifically with the NMB Management Training Program. So this is also a vote of appreciation to the management, but also to the great work that my leaders, but also the team is making at NMB to make my stay very much commendable and very much pleasant. Thank you very much.
Thank you. Thank you.
Welcome, Eric.
Thank you very much for a real life success of the program. So we appreciate that, and I'm sure that's very inspirational to the youth. Back to the fun questions. What are the key measures we are taking to improve our NIMs back to double digits? What plan exists to deepen the FX franchise and maintain our FX leadership in the market? So we have these two. Let me also go to a third one, or okay, we can address these first and then go to the NPL ratio.
Okay. Now, I think just on the NIMs. Now, I said earlier that one of the one of the key, challenge that we see in the market is the rising cost of funds, and this is mainly because of what we see in the market as far as the alternative investments that other players are coming up with in the market, which are highly priced. Therefore, that attracts public investment. Now, what we do, because NIM is just a ratio, I think our focus in terms of optimizing our pricing is very critical. So we'll continue to optimize our pricing, and I think we've been able, in a way, to protect our NIM. If you look at it, look at Q1 2025 up to date, you will see that it has remained very stable at around and above 9%. That means that we continue to ensure that we maintain a healthy and a consistent NIM across all quarters, if you look at it. So we will continue to optimize in terms of the pricing, but most importantly, I talked about our various initiatives as far as driving deposit is concerned. And here our focus is pretty much in terms of cheap and sticky deposit. If you look at it from a rural banking perspective, various touch points that I've talked about, what we are doing in the agri, what we intentionally want to do in the SME sector, all these will deliver sort of cheap deposit for us. But again, alternatively, we are also keen to optimize on our borrowings, and I think we only borrow when we have need for such, but most importantly, the negotiation around the pricing for the borrowing is becoming very critical. I think if you look at it from the funding perspective, that's where we need to optimize further as far as pricing is concerned. On the lending side, definitely you see the pressure, for us to reduce interest rates and so on. And over time, we have seen that lending rates have been reducing over time. And therefore, it is for us to optimize on the pricing as far as liabilities are concerned, but to drive growth of our customers' deposits cheap and sticky, just to stabilize and to make it to cushion whatever the erosion of our NIMs. So I don't want to, talk about getting it back to the double digit, but most importantly, if you look at it overall, when you compare with the market, we are still trending very okay as far as NIMs are concerned. On the FX, I talked about the market stability as far as dollar is concerned, because and this is something very good for the sector. It's something very good for our clients. Having such a stable environment is very important. I think for the banks, I think as NMB is just looking to any other avenues where we can make money alternatively, because and when you look at it from the market perspective, I think NMB is probably one of the top, as far as FX income is concerned. Whilst we have reduced 9% year on year, the sector has reduced by around 22%. So that clearly tells you that with all that has happened in the market, but we are still making good money as far as FX is concerned. And of course, we continue to support our customers as far as FX needs are concerned. So it's an area that we are watching closely. And I think what will be important is for us to continue to support our customers as far as FX is concerned. These are market-driven, demand and supply-driven, and therefore we will continue to play as such. Thank you.
Thank you very much. I know we still have so many questions, but unfortunately we have to bring our session to a close. I would like to welcome the CEO, Mr. Faiz Arab, to close off the session.
Thank you, Win. Once again, I would like to thank NMB. Firstly, congratulations on the performance. And obviously, I know there are a lot of questions around and a lot of debate around the test split. But I think our market is resilient. We'll get used to it. We'll understand it over a period of time. Once again, I would like to thank Mr. Juma Kimori. Thank you so much for your time. Innocent, thank you so much for joining in today as well, and the NMB team. And to all our investors, thank you so much for joining us at iTrust here. And we continue to bring you all our portfolio companies that we deal with, we work with, all the corporates on our following calls for the half year or quarterly. We will be continuing our calls. So thank you so much for joining in and have a good evening.
Thank you very much.